Good morning, everyone, and thank you for having us here today. It's truly a privilege and an honor. And thank you, Jahid, for the wonderful emceeing. My name is Bishir Samak. I am from Jordan, and I'm here to talk to you about Tanda. But before we do that, I would like us to talk a little bit about financial inclusion. For those of you who have worked with financial inclusion, and particularly those of you who have worked on quantifying financial inclusion, you know how challenging it is to define financial inclusion. From my background as a consultant, I have come across a number of definitions. Some of them were to have a transactional account. Others are to have a transactional account and use it once a year, twice a year, sometimes once a month or twice a month. But in its true essence, having a transactional account is a far cry from saying this person is financially included. If we take the loosest of those definitions, having access to a transactional account, in my home country of Jordan, more than 50% of the adult population would be considered to be financially excluded. The true definition of financial inclusion is providing affordable access of financial products to the disenfranchised segments. Essentially, financial inclusion is also economic inclusion, because it is through these products that you can allow those disenfranchised people economic opportunities to help them grow and build. Take, for example, Ali. He's a farmer in the Jordan Valley that we met on our customer discovery travels. And if you give Ali a transactional wallet and with nothing to go on top of that, would you consider him financially included? We took that question to heart, and me and my brother, who's also my co-founder, we started looking at possible solutions that we can present to people like Ali to help them consume more financial products. And the product that we came across that made the most sense to us is Roskas. Roskas are also known as tontines. In Latin, they're called tandas. In Arabic, we call them jama'iyya. And this is how they work. So a group of friends and family, usually friends and family, get together and they decide to contribute a certain specific amount for a certain set period of time. And over time, each would make their contribution and one person would receive the payout. So the first month here, Bishar would receive it. The second month, Zaina, Qaith, Fatma, until the Roska finishes. You might wonder, why would people do that? If you could save in an account that is interest bearing, why would you do that? Against popular opinion or against common knowledge, 1.1 million Jordanians, adult Jordanians, find this as the go-to way to save, despite not having any interest levied onto the account. In the Arab world, 22 million Arabs save that way. In the spirit of Roskas, my brother and I entered a Roska with my mom and her friends. It was 1,000 JD Roska, so it's around 1,500 US dollars, and we decided to take two consecutive slots. So as far as I remember, they were the July and the August slots. In September, we pitched our idea to Oasis 500, who is now an investor. At the time, it was just a pitch competition. We won first place with this idea, and $1,000 to go along with that. We pooled the money and we hired two freelance developers, Mario and George, who are still on the team today. And we decided to take the first step into creating a simple application that digitizes this procedure. As they were working on the lines of code, we were out there asking questions, asking people that we know have participated in Roskas, whether or not there's a need for it. And the conversation usually went by like this. So I like the concept, but I hate it in practice. And if you ask why, the usual answer would be something like, my uncle did not pay, and it just became awkward to keep on asking him for money. And if you ask them, did you ever consider saving with people beyond your friends and family? They would say, how can I trust them? If my uncle can get away with not paying, what about strangers? And this made us think really hard as what our product should offer. The issue here is not, people do not save with friends and family because they trust them. It's particularly awkward to talk about lending and borrowing when it comes to family. The real issue is they don't know how to save with someone else. They don't know how to trust someone beyond their close acquaintances. And so we decided to create a product that allows you to save anonymously with a guaranteed payout. So you're receiving the money regardless of someone defaults or not, and a procedure that is digitized. Simple digitization, nothing too complicated, so that the users feel at home. Whatever they're doing offline, they can do online. They want to do it with friends and family, sure, you can do that. You want to do it anonymously and on this platform, you can also do that. Then we decided to take it a step further. We started engaging with a number of NGOs, some of them are on this slide, to understand what it is that they do on the ground. And it was soon that we realized that we can revive entire sectors through the Roska model or some iteration of the Roska model. Let's bring back Ali. What if we take Ali and we ask him to commit to a certain saving plan? So he's contributing on a weekly basis, a specific amount over a period of time, and we bring in 99 other farmers like Ali. So we have 100 farmers, 20, let's say $20 US weekly contribution with 20 weeks of saving, but this time you're not getting any payouts. So the money is being locked in. For 20 weeks, you're making $20 contribution with 100 farmers, leaving you with $40,000 poured into a cash reservoir. If you're working with an NGO or a government entity, you can probably ask them to match that amount, and you'll see why there is no risk in matching that amount. So another 40,000, leaving us with 80,000. The 80,000 would be a pool of cash that the farmers use to borrow from. So a bank or a credit union or a cash reservoir created by the farmers for the farmers to borrow from. They would agree to a certain payback schedule. Money would be released in a certain specific procedure to make sure that the money is being spent in the right places. And it has to ensure that the business is growing. So if you're a farm owner, you're growing more crops, you're doing better, you're buying the machinery you need, and you agree to a payback schedule. Once everyone pays their money back, hopefully there won't be any defaults, everyone gets their money back. So each farmer that contributed gets whatever he contributed as a saving. So he receives all what he paid back. And for the NGO or the government entity, that 40,000 or whatever you have to deduct from it because of default, it would be reallocated to another project. Essentially, what you would be doing here is you'll be reviving the sector, in this case, the agriculture sector, which has been a center point with the COVID-19 and food sufficiency and all of that. It has been center stage. You would be reviving it with the money from within the sector itself. You might ask, why would I do that when they can borrow from banks? Well, we went and talked with farmers, and the clear story was they were too informal for them to be banked. Whenever they applied to a loan, they would say, we would be asked for things that we don't even know what they are. So there's a clear disconnection between what's being offered in the market and what those farmers need. And by utilizing this method of saving in groups, these farmers would essentially bank themselves. They would be responsible for making sure that everyone is making payments and everyone is part of the pot. So if you don't make your payments, everyone else loses. So what are our values? We hope to save together so we can build together and grow together, because at Tanda we believe that it's better together. Thank you.
Thank you so much. You have finished lot, long before the deadline, and that would allow us to, I guess, take more questions from judges and participants as well. As we did in the first round, maybe we can again start taking questions from the judges, and maybe let's start with Nomsebo this time. Nomsebo, do you have any question?
Thank you, and thank you for the presentation. It's a beautiful presentation, just to highlight that this is a tried and tested solution. We all have been part of a Roska at some point of our lives, and it really does talk to our target group. But my only question is, if you are guaranteed to get from the pot, who is actually mitigating that risk at some point in time? My second question would be one that my colleague Ramazou would actually want to then ask. It's something related with customer identification. I think one of our requirements under any money laundering regime is we cannot hold fictitious clients and customers. And in this case, you're saying people can ascribe to your product anonymously, so that it cuts the trust issues. But then customer identification is also key. It also helps us to build credit records of people. Is this solution going to do that? Because if I want to then find another solution one day to access formal credit, I need to have a credit history or identity. Does this then address that? Thank you so much.
So these are wonderful questions. The first one, I have to say, is an expected question. Usually people ask, how do you guarantee this? So the questions were, how do you mitigate the risk of default, customer identification, and whether or not you can graduate beyond this platform and take money from more traditional sources. So the answer to the first question actually comes in layers. So the way we looked at this risk is the real risk are the I'm sorry.
Yeah, I'm on a virtual meeting, but both in.
I'll just take a second because she asked the question, so I'd like her to hear the answer.
Yeah, but yeah, go ahead. Put it on mute.
Oh, all right. So in terms of risk mitigation, there are layers to it. So one of them actually connects this to the second question. So on the app, you're expected to upload certain documents like your ID. If you have income, you can report that income. We would ask for maybe pay stubs or HR letter or any kind of way to track whether or not that income is accurate. And all of this is jumbled up into an algorithm that gives out a credit score. This credit score guides your access on the application. So the higher the credit score, the earlier you can take a position in the Roska, but also the more you can contribute to our Roska to kind of mitigate that risk. The more I know you, the more I can trust you, and even your activities on the application, the more credit worthy you've been, the better your score, the more I'm willing to take that risk on you. But that's still not solving the problem. So to add to that, we charge a 2.5% transaction fee, but the transaction fee is only realized as revenue once the Roska is completed. Because my job as a company is to make sure that everyone gets their money. It's not that one person made a payment and then I take that money and recognize it as revenue. I have to finish the full suite of things. So until it goes into revenue, it goes into this pool of cash that is used to cover for any defaults. So that would be like a pot that's covering everyone else's defaults. So these are the two layers. The third layer is an operational layer. So we played around. So you're saving anonymously. You don't know who you're saving with. So with that said, it's actually proprietary. So I wouldn't be able to describe it in full. But we played with the way that it operates, so that the risk goes down from 50% because it's 50% the number of people, the number of payments at risk. It goes down from 50% to around 25 to 33%. And by doing that, you're essentially reducing the amount of money you need to keep in that pool of cash. So in terms of customer identification, our partners, we use them as a license as a service, basically. So they're responsible for all of those licensed activities of identifying customers, conducting the proper KYC. The only KYC I do is for me myself. I don't do it to report to any regulator, and that's how we kind of built our product. In terms of graduating, we're currently talking to multiple stakeholders in Jordan to report the activity on the platform to them, so that whoever is using our platform is essentially creating a credit history. So if someone goes to a bank, they would be able to see their activities on Tanda to see whether or not they can bank them. Thank you.
Thank you so much. Can we now go to Leah?
Yeah, thank you. That was a fantastic presentation. I
Thank
have
you.
3 questions, and they've sort of been partially answered. So I still want to ask them because I think I'm coming at it from a different angle, but I appreciate if you'd like to sort of consolidate. My major question was around the social element. In my own personal research on Roskas, I've learned that it's really the social element that people love about being coming together in a group. And also there's a big trust component to that. But also, I think that compulsion to actually pay into the group because you feel you don't want to let other people down, particularly here in the Philippines with Palawagan, and I've heard the same kind of thing with Africa with Tontine. So I was wondering, like, how do you actually get around that? Because that's what I've seen is the major problem with these digital tools. They don't really emulate that social aspect, which appears to be really, really important, particularly where people are living in these close-knit communities. My second one was a technology-focused question. I was wondering, how do you actually drive retention where I found that where these Roskas are actually quite successful, a lot of people tend to graduate into the formal financial system. So a question was asked previously around if they graduate, can they get lending from formal financial institutions, which is great. But from a technology perspective, it sounds like all of your users might leave the platform if you don't have a solution for that. And finally, yeah, I was just wondering whether it was a regulated solution. I know that something like CARE is a bit different, but they're unregulated and sort of appear to be quite happy that way. So I was wondering if it was kind of like that triple locked box solution where it is really based on those local communities and kind of sitting within that local place and not necessarily looking at entering that the formal financial system.
Those are wonderful questions, I have to say that. So let me start with the first one, which excites me the most. So the social element of Roskas. I personally lean to your position when we were discussing what product do we want to launch to the market. Do we want to launch a private model where you're saving with friends and family, albeit online, or are you saving anonymously? I actually pushed the team as the CEO, I get to do these things, to do the private model. And I had a lot of discussion with my co-founders, and they were all saying, no, 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 let's do the public model. When we actually did that, no one felt comfortable doing that because we're doing it with our friends and family. Why would I come onto your platform and pay a transaction fee to do something that I can do offline? It doesn't make sense to them. So when we learned that, we removed all transaction fees on that because we understood this is a place where customers can be engaged, but you don't have to monetize them in the traditional way. Just the fact that they're doing it on the platform, you'll figure it out later on what you'll do with them on the private model. On the public model, it was actually, as apart from my co-founders, when we were marketing on social media, it was in popular demand. Like every time we post something, when are you going to release the public model? When are you going to release the public model? And the more we looked into that, as you said, there's a compulsion aspect when it comes to saving in groups. But as the example that I gave, sometimes the closest of your relatives don't pay, and that makes for a very tough conversation to be had. So people would rather not have that problem in their mind and just receive the money, and I'll pay you the 2.5%. Some of them were like, heck, I'll pay you 5%. Just guarantee the payout. I don't want any of that noise. So that's the first aspect to it. The second aspect to it, and it has to do with empowering. So in Jordan, and it saddens me to say, but in some sects of the society, it is really male dominated. So the female doesn't really work. She doesn't generate any income. Any money that she has is probably given to her by her husband. And so she's not really empowered. And we were engaging with NGOs. They said that this has been a tool for empowering. So by onboarding them onto this thing where they save anonymously, they're keeping money aside with no one knowing. So when she decides to contribute in the household, she would have a very loud voice because she knows she has the power to back that. And that's why the saving component, saving anonymously component, is very important. So I hope that answers the first part of the question. As for the second part, in terms of technology, yes, they can graduate into first of all, in terms of technology, yes, we keep a log of what's going on. Right now, the MVP is on the market. We're looking at currently at the architecture of the the new product, and we'll be incorporating things like machine learning to improve the credit score. So when they graduate, what we learned from the market so far, and that's again through conversation, is that people don't particularly like banks. So there's a certain negative connotation where they want a substitute for the bank. They're not with the banks, not because they can't sometimes, it's that they don't want to be part with the bank. And especially considering Sharia compliance and all of those other things, people are worried of interest because maybe it's not halal. And so they look for those alternative solutions, and that's why they consume Roskas heavily. In terms of regulation, I think I already answered that, but we kind of connect to our partners to make sure that we're covered on that end. Sorry, Jahid, for going over.
Not
Thank
a problem. But for the new questions that are coming in, please try to be a little bit.
All right.
Ramizul, do you have any question?
I think you're on mute, sir.
Ramizul, you're on mute.
Okay.
Yep.
Thank you.
Yes.
Thank you, Bishar, for your nice presentation and your ideology that you you conduct in your presentation. It is some of the components is very much related with our Grameen Bank concept. So thank you for your presentation. So I have a very few questions because Namsibo already covered AML CFT aspect. So one minor question about this issue that those who have no any proper ID. So what is there any option to incorporate in your system? So because in many countries, especially the women's, they are they have no any proper ID or national ID card. So is there any option to incorporate with them in your system? Another question is that do you have any current statistics on gender issue? Because already it is a workable in your Jordan. So can you just share the statistics about the gender statistics? And one more question is that what is your growth strategy for the future? Thank you.
All right, so again, great questions. I'll start with the first one. I'll be succinct as Jahid asked. In terms of identification, so because Jordan has a lot of refugees, the government has worked really hard on identifying everyone. So everyone would have an ID. But of course, there will be people on the fringes. The way we solve that is we're engaging with NGOs that particularly focus on disenfranchised women. And by doing that, we would get the chance to reach these people on the ground. Because if I can't find you in a way that I can verify straight up on the application, I would have to find another way to do that. So by working with NGOs, going on the ground, meeting these people on the ground, they would tell me we don't have identification. You can start looking for case-by-case solutions for these people. I'm sure this is not the best way to go about it, but you still have to comply with all of the other regulations that you're working under, even if your partners are, but you have to go through them. And that's the best approach we can come up with. If you have any suggestions, please feel free to shoot them across to us. We would love to learn from you guys. In terms of women's statistics, so of the 42% of people that are banked, there are, I think the number was 34 or 36% of the 40, not of the 42. So 36% of the total 42 are men. So that leaves women with around 6 to 7% penetration in terms of banking. This product is made for women. It's been used for women. All of the use cases have been women, not on our platform, but I mean like in general. And so we're sure it's going to be a hit in that regard. I'm sorry, I forgot your third question. It was
your growth strategy.
Our growth strategy. So what we're going for in the long run is to become more of a neobank. So these people are using your Roska. We were going to add on other features like small salary advances. So maybe like $50 to $70 of salary advances to certain groups. They would have to comply with certain things. We're going to offer microinsurance, a marketplace that includes microinsurance, products on discount, things like that. And eventually we will introduce something called the Tanda card. The reason we're doing it incrementally is we want people to consume these things without really being conscious of them being banked. So that one day when they're asked to open a bank account, they will look back and they realize that they've been banked for a year or so now. Because all of those products, even though they're not credit cards, they're not loans, they're not mortgages, these are actual financial products that improve your financial well-being. So by introducing all of those products, working with NGOs, we believe that we would have a big scope to work with. We will offer all our products as a microservice product. So if a bank wants to implement any specific part of our product, we can introduce that into their banking application. We can iterate in multiple countries relatively easy because of the way that the product is built.
Thank you. Thank you so much, Bishak. We are over time, but I guess I'll take one question from the participants. And most of the questions are along the same lines. And the one question that I'll take B2Drika only in a straightforward answer. So you can take 20 minutes to answer each of the 3 questions. So I'll read that out for you. What happens in case of a farmer missed a payment? The second one is, are there any legal paper docs that needed to be signed? And the third one is, have you tried to partner up with microfinance entities? 1 minute.
Nice. Okay, so the first question, what happens if someone misses a payment? Again, we have a cash pool that's being set aside from those transaction fees that will cover that, which answers the second part of the question. Yes, when you receive the money, you would sign certain documents that you understand that you're receiving this money, that you have to pay it back. You're legally bound to pay it back, but we're not looking to sue anyone. So we hope we can find other ways that we can, by dialogue, to make sure that everyone is making their payments. In terms of the third question, what was it? Sorry.
Have you tried to force partnership with
microfinance institutions? Yeah. So our product doesn't really fit with them because they focus on generating on interest in specific, and usually their interest rates is pretty high. We would work with them in terms of targeting their customers, but we wouldn't partner with them on the back of just there are no real synergies really there.
Thank you so much again, Bishar, for your.
Sorry for going over time.
No problem at all. We are just 2 minutes over time. But again, thank you so much, and thank you, judges.